Good day, students. You're welcome to Business Studies class. And for today, our topic is trading profit and loss accounts. Trading profit and loss accounts. Under the topic trading profit and loss accounts, we'll be considering the final accounts. Final accounts. By definition, final accounts are financial statements that are prepared at the end of a financial period. And we know that in accounting, when we talk about an accounting period or a financial period, we're talking of a period of 6 months or 1 year. So we define final accounts to be financial statements that are prepared at the end of a financial period, say 6 months or a year. And in classification, final accounts are classified into 3 classifications. We have the trading accounts, the profits and loss accounts, and then the balance sheet. The trading account, the profit and loss accounts, and then the balance sheet. Prior to our trading profit and loss account, we have considered in the subject business studies some other accounts that are prepared before these final accounts are extracted. We have prepared, we've discussed about the cash book and various types of cash book. We have also considered the ledger accounts, and then we've also extracted and prepared the trial balance accounts. Now for the cash book accounts, we know our format for preparing the cash book accounts. The table format is the regular formats we use for preparing accounts for the purpose of our subject. We use the table format, and we know that for every of our accounts we have 2 sides. We have 2 sides. We have the debit side, and then which is the left side, and then we have the credit side, which is the right side. For our cash book accounts and preparing the ledger, we know that for the single column cash book and the ledger, they go with the same format, which is having 2 sides. The debit side having 2 identical sides. The debit side having the date, particular, folio, amount, and for the credit side, which is the right side, having also the date, particular, folio, amount. And in closing up your cash book, you usually have a cash balance which is carried to the debit side. The cash balance is extracted at the credit side, which is usually carried over to carried down or brought down to the debit side. Now, from extracting your ledger from the cash book, you apply the principle which we call the double entry principle. The double entry principle, which states that for every debit entry there must be a corresponding credit entry, and for every credit entry there must be a corresponding debit entry. Now, these transactions that have been entered into the cash book, they will, in extracting the ledger, they will stand as an account of its own. This is just like a reminder of what we have done in our JSS2 classes. Just trying to remind us before we discuss properly the final accounts. They will stand as in preparing the ledger, they will stand as an account of its own. Each transaction in the cash book, like the capital, the sales, the purchases, transportation, wages, salaries, each of them will stand as an account of its own. And you know that the debit side being money received into the business account, all transactions there in the debit side, when they are standing on its own, will go to the corresponding side, which is the credit side of the account that is being prepared in the ledger. And all transactions on the credit side, which are like purchases, your wages, your salaries, your electricity rates, and so on, will stand as an account of its own, but we go to the corresponding side, which is the debit side. And when you are now extracting your trial balance, each of these accounts prepared that has stood out as an account of its own in the ledger will then be extracted into the trial balance making all balances, listing all balances, because the trial balance is used to test the arithmetical accuracy of your ledger entries and your ledger accounts. So each of these transactions will be listed, or the accounts will be listed in the trial balance. The total balances, both on the debit side and on the credit side, in the trial balance must be equal. And if not equal, it means an error must have been detected while extracting the ledger. And now, after you're through with the trial balance, then from the trial balance you can now extract the final accounts, which are the trading accounts, the profit and loss account, and then the balance sheet. By definition, trading account is a final account which is prepared to determine the gross profit or gross loss made by a business. It's a final account used to prepare, that is prepared rather, to determine the gross profit or the gross loss made by a business. Now, trading accounts can be used to calculate the gross profit or the gross loss. It can also be used to calculate the cost of goods available. It can be used to calculate the cost of goods sold, and we can also calculate the net profit, which we also refer the net sales, which we also refer to as turnover, the sales, and also it can be used to calculate the net purchases. And then the second classification of the final account, which is profit and loss account. By definition, profit and loss account is used to determine the net profit and net loss made by a business. It is used to calculate the net profit and net loss made by a business. That's profit at the end of a year or loss made by business at the end of a year. And also, it is, if you look at the profit and loss account, still on the trading profit and loss account, is a continuation of the trading, of the continuation of the preparation of the trading account.